Ladies and gentlemen, good day and welcome to the Hindustan Zinc fourth quarter and full year FY2024 earnings call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jhalak Rastogi, Associate Director, Investor Relations. Thank you, and over to you, ma'am.
Thanks, Doris. A very good afternoon, everyone. I welcome you all to Hindustan Zinc's fourth quarter and full year ending 31st March 24 results briefing. In this call, we'll refer to Q4 to FY24 investor presentation available on our company's website. Some of the information on this call may be forward-looking in nature and is covered by the safe harbor language on second slide of the said presentation. Today on the call, we have with us our CEO, Mr. Anuj Mishra, and our CFO, Mr. Sandeep Modi. Mr. Mishra will begin with an update on business performance, while Mr. Modi will walk you through financial performance, after which we'll open the floor for questions. I now request Mr. Mishra to begin today's call. Over to you, sir.
Thank you, Jhalak. A very good evening to one and all. Thank you for joining us for the fourth quarter and full year results briefing. FY23-24 has indeed been a year of significant achievements for Hindustan Zinc, characterized by highest ever metal and silver production, sharp reduction in cost, and global best performance in ESG. This has been possible due to our efficient utilization of asset, well-planned mining and smelting, talented team, and resilience of our organization. Even amidst the challenging conditions of LME environment, our company has not only preserved the thrive, marking another landmark year. On this note, I am elated to share that Hindustan Zinc, after recording its highest ever silver production in FY24, has become the third largest silver producer globally, making India proud. Here it is imperative to note that all the accomplishments that I have outlined were made possible by on the foundation of safety excellence. It gives me immense satisfaction to report 6 consecutive quarters of fatality-free operation, demonstrating our steadfast commitment to ensuring the safety and well-being of our employees. With zero harm as a core tenet of our business and to prevent reoccurrence of similar incidents within the group, we have launched programs like critical risk management and also started to overhaul infrastructure to ensure continuity of operation without any fatality. Our efforts in safety has been recognized by the British Safety Council International Safety Awards with multiple recognitions. On sustainability front, we have demonstrated remarkable global ESG leadership by ranking first in the S&P Global Corporate Sustainability Assessment during the year. We have also A- in water security and climate change by CDP. As a result of decarbonization journey, we are actively integrating LNG and electric vehicles into our operations. I am pleased to share that our renewable energy power delivery agreement is also progressing well and has been accelerated with first flow of power expected this month. Furthering on our vision of circular economy, I am happy to announce that Hindustan Zinc has entered into MOUs with key innovative and technology partners dedicated to transforming waste into valuable resources, thereby driving sustainable growth and innovation. During the year, we had also commissioned fumer plant at Chanderia for recovery of metals from smelter residue. These developments are contributing to our ongoing efforts to develop our recycling business further. On diversity and inclusion, we launched our flagship initiative, Zinclusion, during the year. Under this program, we have onboarded 16 transgenders till date across various key functions, while also providing an inclusive workplace through compulsory DE&I awareness sessions for every employee. These efforts were recognized at the prestigious 3rd National Transgender Awards. I am also pleased to share that Hindustan Zinc has been awarded the Leadership in HR Excellence Award by Confederation of Indian Industry at 14th CII National HR Excellence Award. Coming to our CSR activities this year, we have extended our footprint by powering over 3,500 villages with 1.9 million beneficiaries under initiatives spanning across areas including but not limited to women empowerment, sustainable livelihood, skill development, healthcare and safety, sports, culture, etc. Moving on to markets, inflation persists in the US services sector, while Europe continues to contend with weak construction and manufacturing sectors, but with expectations on interest rate cuts by the US Fed, coupled with geopolitical tensions between Iran and Israel, commodity prices have surged in April 24, with silver touching its highest in INR terms. The global manufacturing PMI entered expansion zone in February for the first time since August 22, and India is still the brightest spot among the major economies, with its manufacturing PMI recording its 16-year high at 59.1 in March 2024. Global steel demand is forecast to grow in FY25, with India contributing the most with projected growth of 8.2%. During the quarter, zinc prices fell to an average of $2,450 per ton. Despite multiple suspensions and closures during the year, zinc prices have plunged by 25% year-on-year. Total zinc stocks rose to 386,000 tons at the end of March 24, as compared to 243,000 tons at the end of December 23, on account of subdued demand. However, in April, due to the rebound in global manufacturing activity, there has been a push in prices of all commodities, and zinc prices have been on a rise due to supply disruptions and increased global demand. The domestic zinc consumption has grown by 20% year-on-year on the back of stronger PMI and is forecast to stay strong in line with the steel market. Coming to lead, the prices averaged at $2,077 per ton during the quarter, down 2% sequentially and 3% year-on-year on account of softened demand and lower global automobile sales at the start of the calendar year. Moving forward, within budget focusing on infrastructure and additional spend on EV charging, etc., Indian lead market is expected to expand. Silver prices hovered around $23.3 per troy ounce during the quarter and $23.6 per troy ounce during the year, up 10% year-on-year. The prices have rallied lately, tracking the gold prices, and market continues to look very strong. On silver demand, while current Indian industrial silver consumption is relatively lower, it is expected to increase significantly with developing industrial car uses like EVs and 5G, etc. The rally in prices and this momentum is a great start for the new financial year. Giving an update on the operational performance, I am pleased to restate that we have recorded highest ever mined metal production of 1,079 KT and refined metal production of 1,033 KT and silver production of 746 tons on the back of relentless efforts and collaborative ideas. We also have generated the highest ever sales in our value-added portfolio, about 20%. We produced these with zero fatality and at a zinc cost of only $1,117 per ton. These production figures grew at an industry-leading compounded annual growth rate of over 4% in last 5 years, and the guidance for FY25 indicates a continuation of this trend. Our FY25 guidance for mined metal production is set at 1,100 to 1,125 KT. Refined metal production at $1,075 to $1,100 per ton, 1,100 KT, and sellable silver production of 750 to 775 tons. On company's reserve and resources, with an emphasis on ensuring the longevity of the mines through strategic exploration, we have managed to increase the total R&R by about 35% in last 5 years, putting in absolute terms our 5-year ore production adds up to 65.1 million ton. We have added an ore of 118 million ton to the R&R through exploration. We have added metal reserves of 2.5 times as compared to FY20 on a net of production basis. Resultantly, at the end of FY24, our total R&R stands at 456.3 million ton with a total metal content of 30.8 million ton, underpinning an overall mine life of 25 plus years. During the quarter, in line with the national vision and with our strategic exploration objective to upgrade R&R, we incorporated Hind Metal Exploration Services Private Limited, a wholly owned subsidiary of HZL, with an objective to explore, discover, develop and tap mineral resources. Coming to our expansion projects, our 160,000 tons per annum roaster and 510,000 tons per annum of fertilizer plant progress is on track. I am happy to share that during the quarter, we have received regulatory approvals with respect to Bamnia Kalan mine, which will be a new mine to be started by us, and accordingly site activities will start operating soon. Once again on the guidance, please note that we are giving a guidance of mined metal production between 1100 to 1125,000 tons, refined metal production between 1075 to 1100,000 tons, and sellable silver production between 750 to 775 tons. With this, I hand over the call to Sandeep for an update on the financial performance.
Thank you, Mr. Mishra, and a very good afternoon, everyone. As Mr. Mishra already shared, it was a pivotal year marked by significant achievements in volume, cost management, project completion, and new growth path. Happy to share that zinc cost of production for the full year improved by 11%, $1,117 per ton. During quarter 4, company clocked a 12th quarter lowest cost of production at $1,051 per metric ton. It was down 4% quarter-on-quarter and 13% YOY. It was supported by better grade, better linkage coal utilization, softened coal and input commodity prices, partly offset by lower acid realization. This quarter marked the 5th consecutive reduction in the cost of production, with a cumulative sustained reduction of the cost by $250 per ton. Despite the volatility in zinc prices, our financial performance demonstrated resilience as we adeptly sustained margins through agile navigation of market challenges. Silver production has been a standout success for the company during the year. With record high production positioning as the third largest silver producer worldwide, this achievement is worth highlighting once more by me. While I am going to give an overall picture of the financials of the company, I would like to start by sharing 2 key highlights demonstrating how ESG principles are integrated across various functions of the company, including the finance. Hindustan Zinc has been recognized by CXO Genie for exemplary contribution in diversity, equality and inclusion with the finance domain, with a gender diversity of 50% in the finance function. In the metal and mining company, Hindustan Zinc comprised of the professional with a background of CAs, CMAs, MBAs, graduates from esteemed institutions. This award is a testimony of our progress in DE&I. In line with the government focus on empowering the MSME sector, Hindustan Zinc has taken a lead and prioritized payments to its MSME vendors with an average payment cycle of 29 days during the quarter, which is 37% better than the statutory requirement. This underscores our sincere commitment towards ESG principles, bolstering trust in our supply chain partnership through enhanced social responsibility. Delving into our performance, the revenue from operations for the full year was approximately 29,000 crore, down 15% YOY. Even though we had better volume and silver prices and a strong dollar, revenue was largely impacted due to lower LME. The revenue from operations for the quarter was 7,549 crore, 3% quarter-on-quarter up on account of higher zinc volume, partly offset by lower lead and silver volume and metal prices. Revenue for the quarter was down 11% YOY, though the zinc and silver volume were better along with the silver prices and a favorable exchange rate. It was largely impacted by the lower metal prices and lead volume. The full year EBITDA stood at rupees 13,677 crore, down 22% YOY, in line with the revenue, partly offset by significant cost improvement. For the quarter, the EBITDA was rupees 3,637 crore, up 2% quarter-on-quarter and down 14% YOY. It is in line with the revenue from operation and again the good cost improvement. Please refer to EBITDA bridge from slide 30 to 32 for more information. Consolidated net profit for the full year stood at 7,759 crore, though it was down 26% YOY. It is in line with the EBITDA, partly offset by lower tax expenditure. As we move to new regime, our ETR remained 25% approximately. For the quarter, the consolidated net profit recorded was 2,038 crore, flat sequentially and down YOY, in line with the EBITDA and tax expenditure. I wish to highlight here that despite a 25% YOY fall in zinc prices, we successfully maintained our industry-leading margin of 47%, underscoring our strong foothold in the first decile of zinc mining cost curve. This year, we have issued a total dividend payout of rupees 5,493 crore, with a total contribution of 13,197 crore to the exchequer in the form of royalty and direct taxes and indirect taxes. On the back of strong liquidity with the healthy cash flow of rupees 9,000 crore in the FY24, which is after the post-growth capex of and RE investment of rupees 1,200 crore approximately. It is also noteworthy to mention that we have recorded a 7-quarter highest domestic primary zinc market share at 80% during the quarter, backed by highest ever quarterly domestic sales. With recovering economies and brighter outlook for base metals, supplemented by our proficiency during the year gone by, we are geared towards pursuing our guidance of cost $1,050 to 1,100 per ton for FY25 and growth capex of $270 to $335 million, which will be mostly for roaster, fertilizer, RE power, and dewatering, while leveraging the market dynamics strategically. With this, I conclude my comments and we open the floor for your questions. Thank you for listening.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for taking my question, sir. I have a couple of questions. The first one is essentially on our guidance. So I look at refined metal guidance, and if I compare it with this year, it's up between 4 to 6.5%, while your silver guidance is just 0.5 to 4%. So is it fair to understand that we'll be targeting zinc over lead and silver this year?
So, last year we mostly operated our pyro facilities on only lead mode. That helped us to increase lead production and also increase silver production. In a low zinc price environment, that helped us. This time the zinc prices are looking up, and we hope the price rally continues, while silver prices is also up. As of now, our strategy is to operate on zinc plus lead mode, and hence the metal numbers are as high as you are looking at, and corresponding growth in silver is not visible. However, you have to understand that even if I try to operate the whole year in lead plus zinc mode, only selectively producing that much of lead concentrate will not be feasible. So a balanced view has to be taken. If the situation persists like this zinc environment, we will stick to the guidance on metal and silver that we are giving, and that is the most practical guidance that is possible.
Okay, but depending on the price movement, as the year flows by, you can dynamically change it as well.
Absolutely.
Okay. Understood, sir. The second question is on the exploration subsidiary. I'm a little bit intrigued because we have a very rich history of exploration as very well evidenced in our R&R. So what's the rationale for floating a new subsidiary? Is it that we are trying to go beyond our zinc, lead, silver?
Yeah, so government is coming up in a new scheme that they would allow exploration companies to explore areas or blocks that they can earmark themselves. Now, this is a new scheme, and if we explore, then government is going to return part of the expenditure. Then that data will be available to the parent company for tomorrow to bid whenever they become auctionable blocks. So we being in that base metal and deep-seated mineral business, we feel that we have a larger chance, one, to succeed with exploration, and second, use that data to bid fruitfully in auctions and gather further leases. So that's why this is a new development, and we are hopeful that this will help Hindustan Zinc to grow beyond lead, zinc, and silver.
But does it extend to rare earth also? Is there any endeavor to go?
Absolutely. Rare earth, atomic minerals, all the critical minerals that government has enlisted.
Okay. One last data keeping question is, what was the grade this quarter, and if you can also highlight the revenue and capital mine development?
So this quarter grade was 7.62%, and this is the highest grade in the last couple of quarters. And for the capital and revenue, total was 26 kilometers, 50% capital and revenue.
Wonderful, sir. Thank you and all the best.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Good evening, everyone, and thank you for this opportunity. My first question is on the operational guidance for FY25. Now, if you look at FY24, it's been almost a stagnant year as far as refined metal is concerned. And we are now guiding just for 4 to 5% growth in 25, much lower than what our capacity is of around 1.2 million tons. So, just want to understand given all the projects are complete, at the current capacity is 1.1 the peak capacity to consider in future years also, and future growth will come in only after more expansion?
No, so when we did 1.2 million ton expansion, it was primarily for the mined metal capacity of 1.2 million ton, whereas the finished metal was designed to be 1,123,000 tons, 1.123 million tons, right? So we are trying to first, 2-3 years in consecutive years, we have achieved more than 1 million ton in metal in concentrate, and 2 years in succession, we have achieved 1 million ton plus in finished goods. So now that gives us confidence to go beyond 1.1 million ton, and that will be the first test whether we can go closer to our design capacity of 1.123. And as we speak, we have launched number of debottlenecking projects to take the capacity from 1.123 to 1.25 million tons. So it will take maybe another 18 months to close all that. And then after we achieve 1.123, 1.1 million ton plus this year, then next year we can surely attempt at 1.2 million ton, hoping that in between all the debottlenecking projects are completed.
Okay, got it. Second question is, we were in between considering the demerger of metal, silver and recycling, some other third division as well. What is the status and update on that, sir?
No, so as you have seen in the filings as well as the newspaper reports that we have read, so government has written to us saying that perhaps the timing is not appropriate considering they are in the process of disinvestment of the company on the 29% stakes that they have. And at this point, a demerger may create confusion in the minds of potential investors when they do the WFS route. However, looking at the rally of zinc prices, we have spoken to government and we feel that this is the right time for government to disinvest and also help us to demerge these entities and create a silver as a separate entity, because we continuously believe that will unlock another $3 to $4 billion on the market cap. However, it has to be again after the board comes to a consensus and a decision on this, then we can come back.
Okay, last question on the cost. So we are guiding for mid-range around $1,075 versus fourth quarter, this time it's around $1,050. So in terms of commodity price deflation, are we seeing that all the tailwinds or benefits are already priced in or in this quarter and no further benefits are expected? Is that the way to read?
Yeah, so Sumangal, if you see there are a couple of things which happen in the quarter 4, like the best ever the grade we got 7.62, which has an impact on the fixed cost. Also, we had the highest linkage coal consumption, which was 46% in the overall quarter 4. So I think for the full year it was 37%. So we are moderating with the 40% kind of linkage coal consumption, and import coal prices also we are assuming like quarter 4. But as we go more to mine deeper and the higher mine development, as we have to improve volume, some impact may be there, which are all factored in the 1,050 to 1,100. So, and secondly, as Mr. Mishra has said, that we are assuming zinc-lead mode completely for the whole year. So pyro plant which has a zinc-lead mode, it has a $15 cost extra compared to on an overall basis I am saying. So this is also being factored into 1,050 to 1,100. So if you exclude that pyro plant in that manner, actually we are talking about a 1,035 to 1,085 kind of thing. So on a like-to-like basis, so all these factors have been factored into part.
Got it. Thank you so much and all the best.
Thank you.
Thank you. We have the next question from the line of Ritesh Shah from Investec Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, first couple of questions on the mining part. Sir, Bamnia Kalan, finally, I think it has come to fore. Sir, can you detail over here, basically you indicated that we have secured the regulatory approvals. So what sort of regulatory approvals we have? How should we read into resource, reserves, EC, and timelines on the mining output over here?
This is Sandeep here. Bamnia Kalla mine has almost 1 million ton of the resource in the metal term, 700 ton of kind of the silver. So that kind of, it has annual potential revenue at current LME is 1,000 crore plus, and I assume the EBITDA margin kind of this, so maybe 400 crore. So we have received all the approvals from the IBM for the mining plan, consent to operate, consent to establishment. Everything has been received, and now we have to hit the ground with the site activities, and for which we are working with the business partners to start the portal and the initial mining activities. And this is adjacent to the SK mine, so it's strategically located near to the same mine. So that benefit of scale we will also get.
Sir, what are the timelines that we are looking at over here?
So it will be around any mine to start with. It takes 1 to 2 years to get a full ramp up. But I think to hit the ground and then start the portal, it may be in the next year, it may be coming to the main operation part.
Okay. So my second question is, as per MMDR, we will see a certain percentage of our reserves face expiry by 2030. If my memory serves me right, I think it's Rampura, Agucha, SK, and Kayad. So these three mines will be what percentage of our...
Agucha, Kayad, Jawar.
Agucha, Kayad is 2030, SK is 2048, Bamnia Kalla is 2035.
Sir, can you please come again a little slowly? Sorry.
I am saying SK mine has 2048, Bamnia Kalla is 2035,
right.
Kayad is 2048, Kayad is 2048, and remaining mines are 2030.
Zabar. So Rampura, Agucha, and basically Zabar is 2030. So this is what percentage of our mined output at this point in time?
Which Agucha and Jawar?
Yes.
Agucha and Jawar will be put together 65%, but in terms of profitability point of view, 50%, given that SK has the silver-rich mine.
Okay. And sir, how do we see a scenario come 2030, given this, we will probably look to retain the leases. So how the royalty quantum can actually change?
Very difficult to speak as of now, okay, because such kind of a deep-seated mineral auction has not happened, that too on a brownfield. Most of the auctions that have gone for are bulk mineral which are close to surface. Exploration results can be easily verified. So we'll wait as it happens. But we know our scenarios we have already calculated, and we know that we will be able to maintain our profitability close to the current level, even if in the auction we have to provide for a certain amount of extra premium.
Okay. And sir, Bamnia Kalan, you said 2035, right? Did I hear it right?
Yes, you heard it right.
Okay, perfect. Sir, that's helpful. Sir, a couple of questions on financials. Sir, if you could please quantify what is the GR and RE numbers as on March 31st?
So GR is basically 10,384 crore rupees, and including GR and RE, it's 15,000 crore.
Okay. And sir, what is the status on GR to RE? I think there was an ongoing court case.
Yeah, so GR to RE next date of hearing is 17 May 24. So I think that should be the last hearing as we expect.
So 17th of?
May 24.
Okay. Lastly, sir, in the prior call you had indicated, I think we have also referenced it in one of our slides, on waste to basically valuable resources. You had indicated one of the American companies for a potential tie-up. Is it possible if you could provide some technical color as well as some quantification on the scope of the opportunity that we are looking at over here?
So we will not be able to give the name of the company with whom we are going to have tied up. But the quantification, if you see our slide number on the sustainability, if you see the IR presentation, slide number 13, where we have talked about the Hindustan Zinc has a potential of recovering 1 million ton of the metal and 3 kg of the silver from its accumulated waste stockpile. This is the opportunity which we are talking. Total opportunity which we are talking, and tie-ups are already done, and we are in the pilot stage. And at appropriate time, we will be able to comment upon how much capex is involved here.
And sir, when we say 1 million ton of recovery,
we request you to please return to the queue if you have further questions. Thank you. Ladies and gentlemen, we request you to please limit your questions to 2 questions per participant. You may rejoin the question queue if you have follow-up questions. The next question is from the line of Pallav Agarwal from Antique. Please go ahead.
Yeah, good evening, sir. In this quarter, we had a sequential increase in interest costs. But I think, you would have probably generated cash, or maybe our borrowings have come down. So any particular reason for that?
So finance costs are in line with the debt, and also the last quarter we have actually repaid the low-cost certain borrowings, and the certain borrowings have been there. So this is normal routine movement. And I think that is not a much larger impact of the cost increases there. In case if you see from the finance cost, it's 243 to 262 crore rupees.
Sure, sir. Also, sir, after many years, we've seen, reserves and resources being stagnant compared to the previous year. So normally, we do replace whatever we mine out, and there's been an increasing trend in reserves and resources. So will we increase our exploration activities this year, or how will this, pan out over the next few years?
So overall, see, reserve and resource may look stagnant, but you have to appreciate that how quickly we are converting more and more resource into reserve, so that our mining in the current level of 1 million ton plus metal in concentrate capacity at 7% grade and about 16 to 17 million ton ore mining, it is able to continue year after year. That is the first priority. And second priority, yes, large part of Zawar is required greenfield exploration. So our next concentration of effort will be in Zawar, where currently we have moved up the ore production, and we want to take it to 6 million ton and then 8 million ton from the current level of 4.5 million tons of ore production. So for say 8 million ton ore production, we would require a proven reserve of about 8 into 5, 40 million ton. So we are working mostly in Zawar now to increase the reserve and also add more to the resource. But however, you would appreciate that we have to do it in a very, the judgment has to be taken rightly, so that we are in a position to continue mining. That is most important to us. We are able to control grade by enough of underground exploration. At the same time, we try to replenish a little bit more than what we are consuming. Unless if a new block we get, then of course we will have a sudden jump in reserve and resource based on the new block.
And just Pallav, just to supplement Mr. Mishra, if you see bifurcating between resource and reserve separately, reserve has actually increased in spite of depletion by 0.3 million ton.
Sure, sir. So just lastly on, how do we distinguish between sustenance and growth capex? Because, I think we probably have been maintaining about $300 to $400 million of sustenance capex every year. So is this basically just to ensure the continuity of output, or what basically is the distinction between these two?
Majority of sustenance goes into equipment replacement, because you have about 900 equipment in the underground and 900 equipment in the underground. At the same time, about every year about 100 to 200 equipment on a 5-year life cycle basis, they are due for replacement. That is number one. Second, there are various aspects of environment and safety which also requires investment. Like we are on a path to reduce our freshwater consumption, and hence we are putting up water treatment plants everywhere, and then we are looking at sewage water treatment plants to protect ourselves from the inadequacy of rainfall in some years. Then third bit is we are also looking at small capexes which give a quick payback, a less than 12 months kind of a payback, that we include in sustenance. Whereas growth would typically have a higher capex outlay, say anywhere between 300 and 400 crores kind of a project, which increases the design capacity of the plant by not debottlenecking but by adding new assets. At the same time, you can expect a payback period of anywhere between 2.5 to 3 years. Those kind of criteria will apply for growth capex. So fertilizer plant and our new roaster, they would all qualify for growth capex. Whereas small improvements, as I said, between 1.123 million ton and 1.2 million ton will be unlocking through small debottlenecking projects, but number of them with an investment for each one of them maybe somewhere between 5 crores to maybe about 70 crores or 80 crores.
Sure, sir. Thanks. So basically, we can expect this level of sustenance to continue in the future also. So this would be a steady state.
Yeah. It's a steady state.
Right, sir. Thank you so much. Yeah.
Thank you. The next question is from the line of Kunal Kothari from Centrum Broking Limited. Please go ahead.
Yeah, thanks for the opportunity. So one clarification of the capacity expansion of refined metal. Have I heard right that current capacity is 1.123 million ton per annum, and it will be expanded to 1.5 million ton in next 18 months?
No. I didn't say that. We said 1.123 currently, and we are launching a lot of debottlenecking projects to take it to 1.25 million ton. But safely speaking, it will be close. It will be about 1.2 million ton in about 12 to 14 months or maybe 16 months.
Okay. And our target is to raise it to 1.5 million ton. So by when we can say that we can reach the target, by which year that is feasible according to you?
See, we are on the drawing board to actually, we were earlier thinking of taking it in steps, maybe 1.25 million ton in FY26, 1.35 million ton in FY27. But what we understand is much better to plan for something like 2 million ton metal in concentrate production as quickly possible. So we are in the process of engaging global consultants. We have placed order on 2 mining consultants already to look at the mine expansion. We are working on a order for a smelter and infrastructure consultant so that we can come back to you and place before you a vision of making this company 2 million ton, and we are keeping ourselves a timeline anywhere between 2.5 to 3 years time to take this company from 1 million ton to 2 million ton. After the designs are done, they will know whether it will be 2 million ton or it will be 1.7 million ton. That final number we will be able to project to you.
Okay, got it. So my second question is in regard to our new fertilizer plant. So can you state what is the capacity and business economics that we are looking forward, and from when it will contribute to our overall numbers as well?
Of what?
Fertilizer.
Fertilizer plant.
Yeah.
Fertilizer is 5.1 lakh metric ton DAP and NPK, and it has a project cost of around 1,800 crore with a good double-digit IRR. And from the EBITDA, I think there are two strategic. One is a strategic objective for the forward integration of the acid usage and making it more sustainable. That is the one objective. From financial benefit, EBITDA point of view, it will be at current level of the prices 350 to 400 crore rupees.
And when it is likely to get commissioned?
FY26.
Okay. Thank you so much. Thank you.
Thank you. The next question is from the line of Aditya Welekar from Axis Securities. Please go ahead.
Yes, sir. My question is on the guidance which we have shared today. So if I compare it with the analyst day presentation, we have given guidance of 800 tons per annum for silver. But in today's presentation, it is now cut down to 775. And similarly for refined metal from 1,200 to 1,100, and zinc COP from $1,000 per ton to $1,100 per ton. So there is a slight deviation from the
I think no deviation at all. In analyst meet, we did not give guidance for next year. We said that is the potential and the vision for Hindustan Zinc, and we said anywhere between 3 to 4 years timeline to come to those numbers. We said that the company has the potential to achieve up to say 1.5 million ton metal, has the potential to produce between 800 tons of silver, and also has the potential to become less than $1,000 per ton of cost on the cost. So it's more from that angle. Whereas next year concerned, these are the guidance we have given. Of course, we still will continue to work towards going to $1,000 per ton cost of production.
Okay. Thanks for the clarification. That's it from my side.
Thank you. We have the next question from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So I just wanted to understand one thing. If you look at our silver growth guidance of around 2% versus the refined metal guidance of 5%, even with the fact that the fumer just contributed 3 ton out of the 30 ton potential, so why the silver is not growing at all with refined metal?
As we said that we will be operating mostly in zinc plus lead mode in the pyro, so correspondingly our lead production will go down and hence the attached silver production will go down. It is just because of the fumer that we are able to make up for that and still produce 750 to 775 tons of silver at this level of metal of 1.1 to 1.125. Otherwise this number would have gone down to anywhere between 730 to 735 tons of silver only.
Understood, sir. So given zinc prices have jumped up significantly, with this our cash flow would also be increasing. So our preference would be debt reduction, or this kind of debt we will maintain, and whatever the additional money we would have, this can be distributed as the dividend going forward. So what's our take on that?
So, Sandeep here, I think a dividend is a matter for the board to comment. Whenever it will come, we will all come to know. At this point of time, if I will have the cash, obviously I will either invest in the long-term investment where I can get the best of the return, or in case there is an option, we will repay it. So, I think I will be more concerned about the net cash level or net debt level rather than taking out the gross cash or gross gain.
Point taken, sir. So just one last thing, from our understanding purpose, sensitivity-wise, how much 5% additional value-added sales would move our EBITDA? If you have
value-added production like zinc alloy, this is not from the EBITDA or PAT point of view. This is more from being the strategic and making India self-reliant. Like zinc alloy has a total market of 30 KT and we have also put up the plant for 30 KT. So we want to reduce the import dependency. That is the more from that point of view. If you see the value addition from the zinc alloy, it will be 40-50 crore. But I think you should not look from profitability point of view everything. Look at more from the holistic, how we make India self-reliant by making zinc alloy internally in India only.
Understood, sir. Thank you. That's all from my side and all the best for the future.
Thank you. The next question is from the line of Shweta Dikshit from Systematics Group. Please go ahead.
Hello, sir. Good evening.
Good evening.
Sir, for my understanding, could you just throw some light on the zinc plus lead mode of operations that you were talking about?
So we have a pyro facility that furnace can run with input of zinc concentrate and lead concentrate mixed together and converted to sinter, and that sinter is fed to the furnace. After melting, we produce both zinc as a finished good, also lead as a finished good in that process, and balance residue carries the silver that frees up from the lead, which is again taken to silver refinery plants and produces silver. Now, in this process, if I don't feed in zinc and only feed in lead, you can understand that then the furnace is full of lead, the furnace residue is full of lead residue with the silver, and then it can produce more silver. That is the very simplistic way of understanding.
Understood, sir. Thank you. My next question is on the line on what's your outlook on zinc prices in the near or medium term?
Zinc prices near and medium term? No, there are various reports speak on something with the current movement. Looks like some of the reports are even slightly conservative. The first report I will refer to had predicted when we are in the month of February, predicted that by December zinc would touch $3,000 per ton. But if I follow last 20-30 days of movement of price, looks like we'll breach that mark of 3,000 much earlier than December. Maybe somewhere closer to August or September we will breach the mark of 3,000. By December I am very hopeful that we will be closer to the mark of 3,200 or so.
So, sir, is the underlying demand favorable for such a price movement? Because the recent uptick has been, more on the geopolitical or external factors. But what are we looking at a favorable underlying demand here as well?
So apart from the underlying demand, you should also know that the TCRC is also growing at the lowest. Currently, what we read in the media Teck Resources and Korea Zinc entered into TCRC of $165 and current spot is going $75, which clearly indicates that a concentrate market is in a quite tight supply. Because of the higher cost, many of the smaller mines have got closed. So concentrate market is in the shortage, and that's how you can see it is impacting on the overall supply-demand situation where the MIC is shortage and the prices are going up. So you are right, the current supply chain issue may also be, but fundamentally what Mr. Mishra has said, sooner than around in December, we can see around $3,000.
Sure. Thank you so much.
Thank you.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Ms. Jhalak Rastogi for closing comments. Over to you, ma'am.
Thank you, everyone. With this, we close today's earnings call. For any follow-up questions or clarifications on the results, please feel free to reach out to Investor Relations team. Thank you so much.
Thank you.
Thank you. On behalf of Hindustan Zinc, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.